Okay, yeah. This is Oando full year 2025 results. You know, it took time for them to release this result. They were flagged by the exchange and stuff like that, but finally it's out. We analyzed it on the 13th of July. So this is the video analysis. Just like always, you can go to our YouTube page and X page, search for _invest, _invest. You can download these graphics. So the headline reads thus: Oando 28 results, revenue dropped by -22% to 3.18 trillion. Then cost of sales exceeded revenue. Just imagine a situation where your cost of sales is exceeding your revenue. So naturally the margin didn't really compress, rather the margin flipped to a negative 0.09% from the previous 2.28% increase in 2024. So then there are some things the auditors are flagging due to the uncertainty on the going concern of the business. So let's dive into it. First of all, let's go to you can always read this. Some of the things you are seeing here is not spoken. Some of the ones spoken is not here. So you combine the two, read up the analysis on X, then listen to the video so that you get a broader sense, because we can't post everything in one post and we cannot also say everything in one video. So it's a combination of both complementing each other. So let's go. So these are the graphics. So first of all, from the price point, this is a technical chart. So from a price point, as at the time of recording, Oando is trading around 40 naira per share. It toppled close to 100 naira or 90 naira plus in 2024. Since then, it has been declining. So this is what the technical chart looks like. Then let's go to the income statement side of things. So this is the balance sheet. Hold on a sec. This is the cash flow. Okay, for the cash flow side of things, the cash flow it had in 2024, it had a negative free cash flow of 553.8 billion. In 2025, it had also it narrowed down, but it's still a negative free cash flow. You know, in finance, when you're tracking these numbers, a negative can be a win if there is an improvement. So just know that there was a swing in the negative cash flow. It tapered down to now 70.1 billion naira. So this is the income statement that we were explaining. So for the income statement, you see what revenue was in 24 and 25. So there was a drop. Revenue in 24 was over 4 trillion, but in 25 it is now 3.18 trillion. So slightly decreased, and cost of sales, like we are saying, increased marginally. Then if you look at the operating profit side of things, we see that the operating profit also did pretty well. It increased because of some of the things. There was a bigger other operating income. It helped to cushion this, and this is what did the heavy lifting, which we are going to explain. Then you can look at the profit after tax and whatever. So it closed net a bit slightly. Okay, you see what did this one did the heavy lifting in 24, and it was slightly lower. So overall, if you compare the operating profits of 24 and 25, you see everything in comparison is just declining. Then profit after tax also declining. Then profit, so just eye for an eye, if you compare it to 24, everything declined. It was only in few places that we saw increase. Then if you see yes, of course, the earnings per share also increased. So this is what the balance sheet income statement looks like. Then you look at the key metrics like the margins. All the margins were entirely compressed, or the margins were compressed. So but let's head to the balance sheet, then I'll explain some facts behind the figures. So for the balance sheet side of things, Hold on a sec. Okay, so this is the balance sheet. So if you look at the balance sheet, you see that the total assets actually grew by over 15%. Then if you look at the equities, it's still a negative equity due to the losses. So the equities are still very much is a negative. It is running on a negative equity. Then the liability also is voluming up. Look at the total liability of close to 8 trillion. So these are the books. So let's now go to the facts behind the numbers and what they are flagging and stuff like that, so that you bear that in mind. Then for the income statement, revenue was actually driven by operating and portfolio mix. They have some businesses that their business is majorly divided into, you can divide it into two. There's the one we call the supply and trading, which was 86% of their business at a time. What they do is you import crude, you import fuel, you sell, you trade the fuel and make the margin. But that launch is being eaten by a refinery in Nigeria. And so if 86% of your operation is based on importation of fuel, now there is a private refinery in Nigeria, of course, Dangote refinery. So it has taken off that demand from the market and filling in that demand. So that's affected them marginally. Secondly, they now have the exploration and the production side, where you explore crude and produce. That segment grew by 14.7%, but the supply and trading segment dropped significantly by 26.1%. So that is one thing that affected them. Then they also booked again, at a point in 2024, they acquired a stake in Nigerian Ajib Oil Company. So that stake also, they made a bargain purchase. Like when you buy it, in finance, there is a way you buy an asset in an undervalued way. So you even make a purchase by buying. So it's called bargain purchase, which was close to 784.8 billion. Then another thing, that here comes the things that some of these guys are flagging. One of the things the auditor was flagging is that a shareholder loaned them, and they decided to settle that shareholder through shares. That's converting that debt to share. Which somehow, yeah, you can do it, but there is a way to do it. The way they did it was not in line with the CALO, which is the Corporate Affairs and Matters Allies. That's the law that covers and control or regulate what corporate companies do. Then also some changes that came up is that the legal issues they had has fallen significantly from 5.3 trillion in 24 to just 1.4 trillion in 25, which is a positive. And finally, there was a presidential order in 13th of February that requires all oil and gas limit of royalty, oil tax, and everything to be paid directly into a federation account. So this is it. So going forward, what they flagged is this. So, and there are some proposed solutions, especially to take that balance sheet from its negative to the positive, and a redirection of their business, since the trading arm of the business has been broken by competition. So they are now trying to rewire their business, segue into other things, which we will tell you more when their Q1 2025 results comes up. And remember, we're already in Q2 2026. So when those results comes out, we now update you more. But as it stands now, there are some things they are doing. So you read up the forward guidance and know the way to go around it. So there was also, if you read up here, you see that this is just different things. So It's just a mixed this thing. So you read it very well. You have to be careful with this one. Read it very well. So that's it about Oando. See you on the next.